do have the management of Sona BLW joining in. That's the company on our radar. Remember, the Q2 performance has been solid, robust revenue growth of over 20%. Margins have expanded by 300 basis points. And the revenue share from the electric vehicle segment, the BEV segment, has risen to 27% now. Vivek Vikram Singh, who's the MD and CEO at Sona Comstar, joins us now to talk about that. Vivek, thanks a lot for joining in. Once again, another robust quarter. And I was going through the first half revenue growth, very strong at 22%. You're now sitting on a base of 1,500 crores. What is the outlook for the second half? Can you replicate this kind of performance? And what are we looking at in terms of a target for the full year?
Hi, Sonia. Good morning. A lot of questions to start the morning with. We don't give forward guidance, so we don't comment on full year numbers or full year projections. But yeah, I mean, we've done well so far. We've doubled since we listed. I think what we did in profits and EBITDA in FY21 entire year, we've done in the first half of this year. So yeah, our growth's been consistently strong, and we hope it will continue. There's no reason for it to not continue that I can see. That's all I can say.
Okay, so when you say there's no reason to not continue, I'm just trying to understand whether the pace of this growth is something that can continue. This 20% growth that you've seen, is this something that you can sustain? Because now you're seeing increasing number of orders in the BEV segment. You've just secured a new order from a North American OEM player as well in the electric vehicle space. So just trying to understand that, is this 20% growth sustainable, or can you even do better than that in the second half of the year?
So yeah, I mean, our growth in the last 22 years has been about 30% CAGR. So if we've sustained for 22, we should be able to sustain for, 23, 24, 25 as well. Even in the last, I would say, 4-5 years, our growth CAGR is around 30%. So yeah, it should be sustainable.
All right. Hi, Vikram. Good morning. Nigel on this side. Vikram, your stock price is up in a market that's falling, tells you the kind of investor interest we're seeing as well. But I was just looking at your presentation, a couple of aspects stand out. The differential assembly, that is roughly around 20-21% of your total business. And for the last few quarters, the revenue number is stagnating in this 160 to 170 crores. Yes, on a year-on-year basis, it's looking much better. But on a quarterly basis, this number is stagnating. Is there any kind of concerns with regard to demand on the EV side of things in America as well as in the UK?
No, not really. And see, our business, I know you guys have to study a lot of businesses and analyze them. Our business is not one in which you look at quarters, because when new programs or new car models are launched, only then would you see a big jump. So what you'll see is a more, square type of function where you will have a spurt in growth, then you will stay for that kind of product for a bit at the same revenue numbers, then it goes up again when a new program launches. So I would say year on year is a better way to compare. Second, when doing these things like quarterly adjustments, every car maker in the world, a couple of weeks in each season, so 6 months, will take a break, for scheduled downtime for maintenance, etc. So you will suddenly see that up and down. But that doesn't, I won't read too much into it. The year-on-year comparisons are far superior for that reason.
All right. Vikram, the reason I asked you that is because from the next quarter onwards, that year-on-year comparison will catch up. From the next quarter onwards, because you have been doing this 155 to around 170 crores on the differential assembly business. That's the only reason I asked you. But as you said, you're expecting it to continue in this vicinity. The short point I'm getting to is there's no concern, right, emerging on EV sales in the Western world. You don't see that happening. You see a bit of consolidation phase.
No, not really. We have a pretty solid big program launching soon. So as soon as that starts ramping up, you will suddenly see this number go up a lot. And then a quarter after that, if you ask me why hasn't that grown Q on Q, it will be again a hard question to answer, because ramp-ups take time. We keep winning new programs and new customers. So there is a lot of those things. EV growth in the Western world has actually taken a bit of a pause, but that's also because I think automotive growth also has taken a pause. I think the share of BEV to total has been hovering around that 10% for the 2 quarters. So if we were just supplying to, let's say, 1 or 2 people on 1 or 2 models, of course it would be a concern. But if you keep adding more programs and you keep adding more customers, you're not just growing with the industry. What you're doing is you are growing with your customers, plus you're increasing wallet share and you're increasing market share. That's the only reason. I mean, if you look at our growth again, and I'll point to that, if you look at the last 8-9 years, we've grown at about 30%. Industry would have grown in low single digits in this period.
Got it.
The reason is more than one product, I would say.
Yeah, no, absolutely. So, Vivek, hi, good morning. Prashant here. So, will that kind of growth rate continue without getting very specific about 24 or 25? Or do you think one needs to moderate that? Because as the base also gets a little bigger, that is one. And second, you said there's new programs which will kick in. Could you explain that a little bit? And, are you talking about the light differential, I think, which you mentioned earlier as well? Or what exactly are these new programs and what kind of ramp up are we expecting?
So good question, Prashant. Obviously, as scale increases, growth gets harder and harder to maintain. I know when I started working here, we were a 350 crore company. That was FY16. If you double the first half, just annualize it, we will close at 3,000 plus this year. That's 9 times in 8 years. Obviously, as you gain scale, that kind of growth rate becomes harder. But at least for the next near term, which I say 3-4 years, this 20 to 25, 30%, that kind of growth is fairly doable. We know that because of our order book, and we fairly transparently share our order book. So that is known. What happens after we hit 1 billion type revenue, that's the one we have to solve. That's what we as management are trying to solve for today. So when you mention the lightweight differential or the new products we're launching, they won't solve anything in the near future or the next few quarters. They are there to solve for FY27, FY28, FY29, because that's when your growth rate starts dipping, right? So you have to start planning 3-4 years earlier, because also in auto, the first RFQ to purchase order takes about 9 to 12 months. Then purchase order to SOP takes another 18 months. So what we do today, we will reap the rewards 3 years later. So yeah, that's the plan. Hope we continue doing it as long as possible.
Sure. Vikram, I want to understand a little bit about the global electric vehicle landscape as well. There are a lot of new products that you folks have gotten into that we've spoken about, but I want to understand which is the product that's giving you the most traction globally, and also geography-wise, where are you seeing the maximum amount of traction now from a global EV landscape point of view?
So good question. I mean, our EV revenue has certainly grown. This was our highest EV revenue ever, 207 crores. The products that we are gaining most traction and most acceptance, and I think we will have double-digit market share of the world, would be the electric vehicle differential assembly. There, at least for all the complex drivetrains out there, be it the highest end of the vehicles, there we have done fairly well. I mean, we are, if not number one, number two always supplier anywhere. Most likely we are number one supplier on that product. Second product that obviously has been exciting, which 2 years ago was just 0% and now it's reached 5% of our revenue, was traction motors. But there we're not very global. We are still an Indian player. I would say we are the largest in India in that electric two-wheeler, three-wheeler market share. That also continues to grow quite fast. As a product segment, it is the fastest growing. Third, and hopefully that launches in 2 years, will be our intelligent suspension motor that adjusts the car chassis proactively. So it will judge, it will assess the road conditions and raise or lower the height of the car to give you a better ride. So that will be the third most exciting product that should hit the road in a couple of years.
Okay, so that's on the product side. So 3 of these products are doing very well. Of course, lightweight differentials and traction motors, as you said, doing very well at the moment. My second part of my question was on the geographies, right? Which are the geographies where you're seeing maximum potential, not just for your own company, but from a global EV landscape? And given that you are seeing a lot of potential in these new products, do you have a propensity to increase your operational performance as well, your EBITDA margins further because of this?
So markets, North America, Europe and India markets, relatively, I think this time Europe and India have done better than North America. North America had some temporary issues with the UAW strike against the big three OEMs. But like I said in the beginning, it is indeed a very good morning. I woke up to the news that that strike is in its end game. Hopefully in this week or next week, we should see the end of that strike. So that's really good news for us. So now that America will also pick up now. So yeah, all three markets doing fairly well. I think the only segment not doing well would be the off-highway market in India. Apart from that, I guess everything's doing actually pretty well. But you have to also keep in mind that in the last 3 years, auto has been quite down. 2018 was the peak of the auto world, right? Light vehicle sales hit 96 million. We are now doing 82, 83. So even now, it's relative to the really bad last 2-3 years. We are still nowhere close to where it could be. So frankly, I think, as you guys study, the Indian auto component industry can gain a lot as this 80 goes back to 96.
Sure,
a lot of the supply chain. So it should be a good outlook for some time.
No, the second part of my question was on margins. This 28% figure that you clocked in the first half, how much can you build on to that in the second half?
Yeah, I was trying to not answer it because we don't like increasing our margins by too much also. 25 to 27%, as I told you when we did IPOs, is our target range. Growth, margin and return, a management team has to balance all three financial metrics. So having one do too well at the cost of others is also not a great thing. So we will maintain that, around that 26, 27% mark is what our target range is.
Okay, all right. Got that. Vikram, final question from my end then. You were talking about doing close to around 3,000 crores. Mathematically, that should definitely be possible. But at peak revenues, what can you do, given the kind of growth that you're talking about, given the kind of deal wins that you're looking at as well? With the current investment, what's the peak revenue potential?
Yeah, it will be hard to calculate for me with the current investment because every product has a different capacity utilization. So what I have to do is divide that product revenue by the capacity utilization and get it. But yeah, still, I would say 5,000 crore with the current kind of capacities we have easy. But we are almost always in a capex thing. We are always investing. There is no time in the last 5 years that we've not been building a new plant. So that will all continue for some time, at least like I said, to Prashant's question. Next 3-4 years, we do not see ourselves slowing down.
Yeah. No, and the only question is after that billion-dollar mark, as you said, right? Just one last question. We hear so much on the electric front, technology changes, right? Is the template kind of set? There was a auto show in Japan. Toyota, for example, featured some new models. There's a lot of hullabaloo around it. Is the template set or is the template still evolving? And is it just about the type of battery, a solid state, or is it? The overall this new vehicle away from ICE that itself is in its evolutionary phase. Quickly, Vikram.
Excellent question. I wish I could just do a very quick one, but I will say no.
So set. Take your time, please. Go on.
So it's not set, right?
Okay.
Powertrain change is a very, very big process. It requires tens of billions of dollars of investment per car maker. So it's not something that happens easily. The ICE powertrain, when it was launched in the 1900s, it took about 25 years to finally settle. The product that we make most of, Differential, took 30 years to come into the car. So no, it's not settled. I think the battery chemistry is not settled. I don't think LFP is the right answer. maybe a far, far better battery pack exists. What I do know is that alternate fuels plus electric will be the future. Most likely it will be electric. I would say 9-1 odds if I were betting on it. And what I would say is electric cars will become far, far more affordable. The cost to produce them eventually, after a 5-10 year, when it settles, will be much, much lower for the OEM to produce, and hence these vehicles will be far more affordable. Which is why we as a company keep trying to innovate on our products, and if we try to cannibalize our own product. This time we announced an integrated motor controller rather than selling both of them separate. We are saying, why not make a product that combines both of them? Lightweight differential, by the way, also means that our price will reduce. Why we trying to do that is so that nobody else can come and do that to us. We would rather kill our own product with a better product than have someone else do that to us. So that's what it is. I think chaos will be there for some time, and it will be a lot. But chaos is also a ladder for people who know how to climb it. So it's a good times, I think, for agile companies.
All right. BEV is around 27% as of the last quarter, as a percentage of your revenues. In the next couple of years, where do you see this number headed? I'm just looking at a brokerage note. They're talking about 38% in FY25. Seems very doable, right? Going by the pace of growth and what's in the pipeline.
Yeah, should be very doable. I think our FY26 target, if I'm not wrong, is 45 to 50%. That's 45. For our ESG goals. So 38 in that interim year should be doable.
Okay, all right. Vikram, it's a pleasure having you with us here, and great conversation. Really, I really enjoyed it, and so did my colleagues. Hearing that perspective, I mean, pretty well-rounded. So good luck to you as you navigate through that chaos and climb the ladder, as you so well put it. Thank you very much for joining us here on CNBC TV18.